Let's bring in JPMorgan's chief U.S. economist, Michael Feroli. Michael, always a pleasure. Our thanks to you. Good to see you.
Yeah, good to see you.
Is it fair to say that the print reduces expectations for at least a Q1 cut?
I think so. Certainly, I think to get to Q1, you'd really have to have kind of a panic situation or a steep downturn in economic activity. And it doesn't appear that that's a near-term prospect. So I do think this takes Q1 barring any big surprise over the next 2 months, I think this really should reduce the odds of that kind of cut.
Can you bundle household survey, negative revisions, ISM services employment, temp jobs down into a more pernicious narrative?
You can if you're inclined to. I think if you take the average over the fourth quarter, what you see is both job growth and wage growth in the fourth quarter was the slowest of the expansion, but still pretty good. As you mentioned, there are some indicators that we'll probably see further slowing in job growth in the months ahead. Whether that actually turns into a negative number, yet to be seen. But I don't think that doesn't look like a prospect for January or February, at least.
Your counterpart over at Goldman Sachs, Jan Hatzius, was with us a few minutes ago, and he sees a March cut because he says core inflation is powerfully coming down, and that's what the Fed is going to want to see, and it's going to be enough for them to cut and not be so restrictive. Why do you disagree?
So I do think they're in a position to eventually cut. I don't think what we heard out of the minutes earlier this week suggests that that's something they have a plan for as soon as March. I think given the wage number we saw today, they probably want to be a little more comfortable that labor costs are moderating in a more significant way before I think they're comfortable to declare victory, which I think a cut is essentially declaring victory given their well-known reversal aversion. I think they want to be pretty confident that when they start, they're going to keep going.
What is happening on the wage front? Because we got a little bit of a tick higher, 4.1% now growth in December. We're seeing real wages really start to move up, which is good for consumption. Where do you think that goes?
So as I mentioned at the outset, if you look at the quarterly average, it's 3.7% annualized, which is the softest since 2020, but it's still a good number and probably a little bit above what you would want to see to be comfortable that inflation is on a path to 2%. So, as you mentioned, this month we were a little higher than expected at 0.4. There's a lot of revisions to these numbers. That's why I kind of prefer to focus on the quarterly numbers. And as I said, those are moderating, albeit still probably a little bit too hot for the Fed just yet.
So what do you think the path of cuts looks like this year?
We have them starting in June and then cutting once per meeting, every meeting thereafter for the remainder of the year. I feel pretty comfortable with that after this morning's numbers. Certainly, it doesn't feel like, as I said, January or March looks particularly likely. Whether they could go in May, that's a possibility. But I think June, feel pretty comfortable with that right now.
Help us understand, Michael, what's on the line for CPI next week and whether or not some of these international jitters are going to move sort of supply chain thinking in the weeks or months ahead.
Yes, we're probably looking for 2 or 3/10 on the core number for next week. I would say one of the concerns here is that a lot of the improvement we have seen in the last 6 months, which Lael Brainerd mentioned, has been due to softening in goods prices, and that a lot of that reflects the improvements we've seen in supply chain performance. If some of these international tensions cause disruptions in shipping and so forth, we could see a reversal in that. We haven't seen it just yet, certainly in most of the measures we're looking at, including some of the supplier delivery numbers that we saw this week. But it does remain a risk, and again, one reason why we might not want to jump on or take a victory lap here on inflation just yet.